low impact news. And you can also select which countries you want to see. So Monday, we don't really have anything that affects us too much. Tuesday, there's some high impact news affecting the Aussie dollar, right? So you see it's high and it's in red. Let's go to Wednesday. So Wednesday, we have the Fed chair speaking, right? So this is a high impact news affecting the US economy. So we have to pay attention on this day, right? If you're in a position, you might want to take some profits. If you are in profit, take some profits maybe Tuesday, because you know whatever news comes out can affect your positions drastically. You know, it can either push it up and you make more money, or you lose more money, right? On the same day, and it gives you the time too. So on the same day, there's another speech, Fed Bowman speech. That's sort of like medium, but if it has to do with the Feds, it's probably going to have an effect on the market. Then on Wednesday, there's a China inflation rate, right? So Wednesday, there's another speech. So there's a speech on Tuesday, and then Wednesday is actually the main speech. It looks like it, right? High impact. So there's going to be at 2:00, 2 p.m. Eastern time. Fed, you know how it goes when he speaks, right? And usually on Wednesday, like if you trade in futures on Wednesday, I think it's Wednesday, 10 o'clock or something. Oil, like there's crude oil data that comes out that has a major impact on the futures market. So if you trade in futures or you're in Forex and you trade in oil, you pay attention to Wednesday. I think it's Wednesday at 10:30. Let me see. It's Wednesday at 10:30. Okay, I'm not seeing it here. It's crude oil inventory something. It comes out every week on Wednesday. So we got Tuesday and then we got Wednesday. Let's see what we got on Thursday. So you will see the corresponding flag here, right? This is Japan news. This is British news. So we're looking for US news. And we are looking for a news with an impact of high, right? So we got, this is high. So Thursday around this time, whatever data comes out, initial jobless claim data is going to be impactful. And I believe Friday at 8:30 Eastern time, we have the non-farm payroll. So let's see, 8:30. That is a major news, comes out once a month. Wait, where is it? It's Friday, the first Friday of July? No. Okay. So I lied. That was last week. Wait a second. Yeah, that was last week. First Friday of July. So it already passed. So yeah, we have Thursday. But anyway, any questions so far? Any questions? Okay, no questions. So let's look at earnings. Earnings. We got some earnings coming up. Earnings. Why is my shit moving so? So this week, coming up, we got Citigroup, we got Wells Fargo, we got Fast, we got Ericsson. we got JP Morgan Chase. So let's take a look. Let's see if we can find something on Friday, right? But if we're we're gonna get in sooner, maybe like Monday. So let's see. Let's look at fast. Start at the bottom. So I'm gonna just pull it up here on my phone so I don't have to switch the screens. Everybody can see though, right? Okay, so let's start with JPM. So JP Morgan Chase, JPM. JPM, we were in it over here somewhere. We took profits, but now I feel like it's on some top boy, it's on some top boy shit, right? But if it comes down here, we can have an entry. If it comes down to like here, right here. If it comes down to this level and it rejects, we can go in based on this setup. So I haven't even looked at the fundamentals. This is 100% technicals, right? So basically, this is what it is. It broke out and now it's trying to come back here to this zone. So that's the demand zone you want to pay attention to, right here. Uh, right here. Make sense? Make sense? Make sense? So we don't want to do nothing until it comes to that zone. And if it comes to that zone, then based on what it does over here, we are looking to buy. And if you want to go deeper, you can check the financials to see, what their numbers look like, but that will take all day. So JPM setup wise, I don't see anything that tells us to get in right now. Wells Fargo, WFC. I know Wells Fargo already popped. Okay, so this might be, ooh, this is nice. This is nice. Why do you think I'm saying this is nice? Come on now. Somebody. Why am I saying this is nice? Like I haven't really drawn anything, but the moment I looked at it, I'm like, this is nice. Why do you think I'm saying this is nice?
Because it's showing the floor at a average, like a major average, and it looks like it's reversing.
Say that again.
What's that indicator? The black line. What's that? A 200 day?
Yes.
Right. So
Yes.
it's at the support of the 200
Yep.
over
So
there.
if you look all the way here, right? If you look here, you see this area here? This was a support, right? Price was doing this. I mean, price broke up and then came down here and consolidated for a bit, right? It couldn't break down. So this level held. Oh, this shit won't stay, right? This level held and then it popped from there. So it makes it a demand zone, right? When it popped from there, eventually it came back and it struggled a little bit in this area. So you can tell there's still some memory unsolved memory. There's some problems here still. Like the market remembers what happened here because there's a cluster of, indecision around the zone. But it pushed down further, went all the way down here, found a bottom. That's the first bottom. So you see it shows
I'm
bottom
good,
number
thank you.
one. Shows bottom number one. And then it tried to go up. But when it went up, where did it get pushed down? This zone, right? Right here. This zone. Does that make sense? So the neckline of the W becomes a support. It becomes a support zone or a resistance zone. Like, so when this happened, it formed a support, a resistance zone, which is a ceiling. Because when price came up here, it got pushed down immediately. You see that? It pushed down. It couldn't go. So there's a point here. There's a connection here. There's a connection here in the middle, and there's a connection here. So eventually it blew through here, went up, and now it's back down. But it's back down where? This has flipped. When resistance breaks, it flips to support, right? So now we can look to do this. Does that make sense? And this is actually the right, like the perfect way to trade. But the only problem is there's earnings. So earnings can change the dynamics of everything. That makes sense? On a regular day, this is a perfect setup. This is a break and retest. So it broke out and it came right back down to that same zone. This is an important zone. We making sense? Or are you confused? Anybody?
Makes sense, makes sense.
Right here. This is exactly how you want to trade. The only problem, like I said, is it's earnings around the corner. So if they beat, it's likely gonna pop. If they miss, it's likely gonna drop. But look, it came down here, hit the 200, barely hit it, but it respected it, right? So long as it's trading above it, that's considered bullish of sort. If I change it to a 2-hour, you see it dropped, but it had a strong green candle. Let me change it to 4 hours to see. Okay, see 4 hour. Let's go to 7 hours. 7 hours is showing a rejection. So see, it did 1, 2, 1, 2, broke up, and now it's right there. So Wells Fargo, we gonna see. We might, but see, now at this point, we have to do a first, like, now look at their financials to see how they've been performing, right? Because now you need something else to give you more confidence to get in. But Wells Fargo so far, not bad. I like it. I like Wells Fargo. So we might take a earnings play on that. We got Wells Fargo, and then we got Citi. Citigroup. City, where is it? Citigroup. Where is it? City.
Well, can you make 1 hour sessions, maybe like 10, 15 minutes going on how to set up our trading view? Because I still can't get my lines to show up.
I bet. I'll do this after I'm done with the earnings thing. But yeah, so okay, Citigroup. Citigroup typically is gonna look, I've noticed that the bank stocks, most of the time, they move the same way. They move the same way. By Citigroup, I should have looked at this because this would have been a perfect, for those of you who like puts, do you see a put opportunity by just looking on this chart? Do you see it? And if so, where? There was a clean put. Perfect put. Like it doesn't get better than that.
Is it oversold?
I mean, it already passed, but I'm saying, can you just see it before I put my line?
Yeah, from looking to the at price way to the left, saying that it came to a previous resistance level that was rejected and respected, and it never broke past that point. So you can kind of tell when it came back to that area, the market was more than likely going to do the same thing, reject it.
Yep. And what did it do there? A clean pin bar. You see the pin bar? This was your trigger. So this pin bar was telling you it's likely going down. Why? Because if you look over here too, there was memory over here. So the last time price got here, which was in May, it came to this same zone. And what happened? It came to here. You see what happened there? A pin bar. Do you see that? So if you had bought a put and shorted it at 64, you made a lot of money because it went from 64 all the way down, like all the way down to 60. So now that you saw it come back up and it rejects at the same spot that it rejected the last time, bingo. It gives you a, so this is a textbook definition of a pin bar. This is what a pin bar is supposed to look like. Like if I'm creating a course, I will use this as an example because this is perfect. You see how well defined it is, how it sticks out. So if you've seen this, knowing that the last time it rejected at that same zone, you will enter right here at the close of this candle. You buy a put here. You will put your stop loss. You put your stop loss up here, right? Right above the tip. So from here to here, this is your risk. And then you're looking to make at least 2-to-1 your risk. So 1, 2. So, but because there's like a trend, it's still moving forward. So you're not trying to short it all the way down here because you may face some support down here, right? So you short it, you're looking to get out somewhere here. So exactly where it's at, you would have gotten out because you're not expecting it to break down. That's not what you're doing. Because when you buy puts on a stock that's going up, you counter trend trade it. You're going against the grain. And if you're going against the grain, you can't be too aggressive with your profits. So one and a half, you'll be good. So if you risk 200, you would have walked away with around 3-something, 320, 350-ish, which is good. And then now over here, you're gonna look for a price action signal to go back up, right? Because that's the dominant trend. So you will short it to here and then look for an entry, price action entry, a candlestick entry to go back. And then once you get up here, you're likely going to take profit because you know there's going to be some sort of resistance in the zone. Making sense? Making sense? Making sense? I don't like puts,
Yeah.
but if you see, that's why I want y'all to understand it so that if you see the opportunities, you buy your put, make your money. You know, I see it, I may not, 9 out of 10 times I'm not gonna do it. But if you see it and you understand it and it meets your criteria for your system, then you just take the trade. It's as simple as that. Let's look at BK. So
Oh, wait,
everything I'm,
before you go real quick, how did you get that exit again? I saw you count, but I couldn't exactly see what you were counting.
oh, it was just a mental count.
okay.
So, but let me explain. So this would have been my entry,
Hmm.
right? So this will be my stop. So basically, this is your risk, right? The space from the entry from 64.73 to 65.27. This is where you don't want it to go. So if it goes up, you are out. But your take profit will be right here somewhere. But you're trying to make at least 2-to-1, 2 times your risk. So you're trying to make at least 2 times this space from here to here. So from 64.75 to, that's about 50 cents, correct? That's about 50 cents. That's like a 50 cents move up. Does that make sense?
Okay.
Okay, so your profit should be about $1 move down.
Okay. Okay.
So $1 down from 64.75 will be what? 63.75,
Yeah, 60.
right? So you probably would have made it because what happened? It came right there, right? It touched it. Do you see that?
Yes, I see it. I understand. Thanks.
So that's what the 2-to-1 risk reward.